Midcap Radar on CNBC TV18. Let's get another corporate conversation going. Navneet Education reported good first quarter earnings, even as elevated raw material prices kept margins under pressure. Managing Director of Navneet Education, Mr. Gala, is joining us now to give us a sense of what was the quarter like, and most importantly, what the outlook is looking like going forward as well. Mr. Gala, good afternoon. Thank you so much for joining us today. Well, it has been a good quarter, especially on the publishing front, where you have seen good revenue growth, and quarter one is usually a strong quarter. Can you give us a sense of what is the sustainable rate of growth here? What kind of margins are you looking at in this segment?
So yeah, Q1 24, as you rightly said, we grew by around
I think
20%.
you're on mute, Mr. Gala. Okay, sorry, please go ahead.
Yeah,
please go ahead.
Yeah, we grew by 20%. But overall, looking for the year, we believe our growth will be in mid-teens. So it could be around 15-16%. And as far as margins are concerned, like earlier years also, we are very hopeful to have EBIT margins in upwards of 30% in this segment.
Okay. 30% plus margins in the publishing segment or on a consolidated basis?
No. On publication segment, I think I was asked about publication. So blended margin with stationery, which normally has been between 20 to 22%, and we are very confident to achieve those margins as well.
Okay, so just to get the numbers right, a 15 to 20% publishing revenue growth for FY24 with EBITDA margins of 30% plus, and for the consolidated basis, you want to achieve margins of 20 to 22%, in line with what you've been saying. Okay, so just zeroing in a bit on the stationery business, because here you have borne the brunt of inflation. Raw material prices have gone up. So can you tell us the extent of price increases that you've had to that you have seen? How much of it were you able to pass on, and how much of it did you have to take into your books and bear?
Yeah, so as far as raw material for the current year is concerned, we did buy paper at the peakest level in Q3 and Q4 of last year, and therefore we saw a little dip in margin compared to earlier years. Going forward, as paper prices have started softening, we believe as we consume our last inventory and start buying new inventory, in Q3 and Q4, we'll start seeing better margins in stationery.
Okay, and how much have the prices come off by? So going forward, when you say margins will improve, will it be back to 20% levels, or will you see some time here? Also, what is the market share looking like in the stationery segment right now?
So prices of raw material being paper has come down between 5 to 10% depending on the variety of paper. And as a market size is concerned, paper stationery, if we talk, it is in upwards of 5,000 crore. And we believe there is enough scope for organized sectors like Navneet to grow here.
In the commentary, you made a statement, to gain market share, we made a strategic decision to absorb some of the cost increase. And this is in the stationery business. Could you elaborate how much you had to bear, and therefore did you see market share increases?
So overall paper prices increased by more than 20-25%. And so blended, our inventory cost went up around 15%. So part of it we absorbed ourselves, and part we tried passing on. So overall, lesser a bit of margins by around 3 to 4% in both the exports and domestic stationery is what we absorbed ourselves.
Oh, go ahead. Okay, all right. So, the other thing that you said in your stationery business is that the export stationery business that was hampered due to one of the product evaluated for anti-dumping duty in USA. Is that still applicable? Will quarter two also see an impact because of that?
This is a seasonal business, so even we sell products for back to school in the state of US. So this year we are not likely to receive back that order. We have made some alternate arrangement for future years to support the demand for the same category. So this year we are not likely to get back that order.
So overall, sir, your exports for the current quarter was about 214 crore, right?
Yeah.
Okay. What can we expect in the full year, FY24? And because then one order is not coming through, what will be the loss in revenues in the current year? So what were the exports in FY23? What will it be in FY24? And will the difference only be on account of that one order?
No, so we were anticipating around 15% growth over 23. We had done around 550 crore revenue for FY23. But this year, with these loss of order, we are likely to come down to a growth of between 8 to 10%.
Okay. Mr. Gala, I wanted to touch upon your Edtech portfolio as well, because you made a statement that you're reviewing your Edtech portfolio and considering a strategy. Are you planning to exit this business? We've had a long discussion last time as well when you were on the show. What's the plan going on here in the Edtech business?
There is no question of exiting, because we are very clear that going forward, education without usage of technology in the classroom or at home is impossible. So we have to be there. Only thing, looking at the markets, we are revisiting and deciding a strategy that helps overall implementation of technology and not going very aggressively.
Okay. So we leave it there. Thank you very much for joining in. That's Navneet Education for you. But let's get back to the M&M numbers.